Great. Thank you. Thank you, everyone, for joining this great webinar happening today. So good morning, good afternoon, and good evening to everyone who could make their presence in this amazing digital banking webinar. Hope you all are having a great day. Today, we have an opportunity to engage in a thought-provoking discussion. I, on behalf of AI Core Spot, welcome all our esteemed guest speakers, the moderator, and all the pretty faces that make up our lovely audience. So let me initiate with a humble introduction of myself and the company. My name is Nitin Naveen, and I'll be your host for the day. I'm working as Vice President of Innovation and Strategy at AI Core Spot, and I bring with me an experience of around a couple of decades in consulting firms dealing in and around the emerging technologies. My colleagues Arvind and Naveen will be assisting me in keeping today's event lively. Also, they will be stepping in to resolve technical glitches if any it comes in between. I'd like to extend my sincere thanks to them for their hard work and dedication in making this event a great success. This webinar is intended to deliver the new age technological advancements in the banking industry with a seamless experience. Speaking about the company AI Core Spot, we started a couple of years back, supported by knowledge and innovation partner InfoVision and technology partner Digit7. AI Core Spot aims to function as a comprehensive knowledge hub, offering valuable information and perspectives on wide range of cutting-edge technologies around the industry, including AI, ML, deep learning, robotics, edge computing, 5G analytics, edge AI, digital twin, AR, VR, cloud, and so on, with the objective of offering an in-depth exploration of all the sectors that involve technology. We introduce a different theme month on month, and we have been progressively gaining momentum. Our goal is to become the leading AI-driven community worldwide where individuals with similar interests like you can contribute to mutual growth and success. We prioritize industry-backed webinars and hybrid events, ensuring that our knowledge base is built on credible data provided by esteemed industry leaders, subject matter experts, thought leaders, and our trusted partners. Further, we nurture the content through the digital content blogs, videos, podcasts, and newsletters to shed light on the ever-evolving industry. So join us today for one-of-a-kind webinar focused on digital banking, enhancing the customer experience. We'll focus on a range of topics: optimal combination of digital channels and physical channels, AI and humans to build trust and rapport, the customer expectations and the customer experience journey, loyalty factors, and so on. Our expert panels will provide valuable insights and engage in a thought-provoking sessions that you might not want to miss. And just to let you know, there are lots more in store for the next months with focus on different technologies like AI, ML, blockchain, IoT, AR, VR, digital twins, metaverse, quantum computing, chat GPT, and so on. May I take this opportunity to further request you all to go through our website, which is aicorespot.io, for future updates. We'll be delighted if you could show your love for us via likes and shares on our social media handles. It will keep you all updated on everything what we propose to offer in the coming months to follow. Now, before we get started with the discussion, here are a few pocket-sized highlights to set up the tone for the intriguing learning and networking day. We would like to introduce our community partners for today. It includes KeyBank, InfoVision, Lendio, Home Capital Group, TIAA, and Finergo, who came together to make this webinar a success. We also want to give a big shout out to all our attendees who took the time to register and join us today. We know you have a lot on your plate, so it means to us that you are here to achieve your objectives and connect with us one another. Ultimately, our goal as a platform is to help you gain valuable insights and build meaningful relationships. So if you walk away with even just a few innovative ideas or connections, we'll consider it as a job well done. Now let me hand over the stage to Brett, who is the AVP handling banking domain at InfoVision. He's also the moderator for this panel discussion. Joining him today, there are 5 great leaders. First panel member is Jonas, who is the Chief Operating Officer at Laurel Road, which is part of KeyBank. Second panel member is Patricia, who is Chief Experience Officer at Lendio. Third panel member is Sania, who is Head of Enterprise Procurement at Home Capital Group. Then we have fourth panel member, who is Dr. John, who is Senior Managing Director, Head of Client Tech and AI at TIAA. Fifth panel member is Tracy Moore, who is Director of Strategy Americas region at Fenergo. So exciting for this panel discussion. Over to you, Britt, to begin this.
And appreciate that. And good morning, good afternoon, and good evening for anyone and everyone, wherever you're attending today. And again, thank you for the panelists and their time today for joining our session. We've got a great topic today, digital banking, enhancing the customer experience. I think you guys will find this is very engaging and a lot of great discussion across the panelists. We'll also be taking questions, so feel free to submit questions in the Q&A section. Why don't we go ahead and jump in and get started? And Sonia, what if I start with you and kind of get things started with how are you seeing, or how are customer expectations and customer experience journeys, and how have those changed over the years?
Thank you so much. So I'm going to start off taking you back a bit of a, down the memory lane. And I remember back in 2011, 2012, sourcing for app developers. Now, if you don't remember what that was like, 2011, 2012, smartphones were already mainstream, and app developing was the hottest topic in the town as a result of customer expectations. This was also the time that we started noticing changes in customer behavior, starting with convenience, getting things done on their own terms, on their own time, from the convenience of their home, their cars, wherever. We also noticed the need for instant gratifications, where customers, because they were walking around with handheld devices, wanted to be able to have the ability to add and remove stuff off of their account in real time. And also we noticed there was a lot more preference to do that than to have a human connection. Now, is it because contact centers have a bit of a reputation for long hold times, or the banking system or the branches have long wait times? I don't know. But I will tell you that in response to all of these changes that we started noticing back then, a lot of organizations really started shifting their focus and focusing really on digital strategies, customer effort reduction, implementation of chatbots and self-serve options, not only on their websites, but also on the apps, because everyone wanted to have that ability to do it from their own phone, a lot more than doing it from their computers. And all of that really started to have a bit of a shift in the customer service sector, primarily the contact centers, because we are now able to offload all of this influx call volumes and really have the contact centers alone focus on more of a consulting type of roles as opposed to transactional ones. So the winning strategy began to change back then, where the war on price, the war on product wasn't really as effective as the war on customer experience. And the NPS, likelihood to recommend, top two box, bottom two box, really became the driving KPIs for every organization. And I think I'll say since 2020, and feel free to argue with me on that one, but I think even the most resistant customers, those that really were hesitant to use technology, have shifted their mindset. Now, was it a necessity or was it a preference? It's up for debate, but we are seeing even those that really refused to be, jump on the bandwagon back 5 years ago are really now utilizing technology a lot more. Just think about online shopping as an example. It is a norm these days. So I think the customer expectations and customer experience really, really did change over the last 10, 15 years, to the point that today we are seeing technology replace almost all transactional types of roles as a sheer response to the customer expectations, which is putting all the organizations in a position where they cannot become complacent and really must constantly strive to innovate, to not only retain their current customers, but also to attract the new ones. So a lot of exciting times, and definitely a lot of changes in a relatively short period of time. And driving force being customer expectations, but also the emerging technologies that we are seeing.
That's great. Thank you for that. I'm glad you touched on the adoption piece, and it's good to hear that even some of the generational folks who maybe are typically used to face-to-face or a phone call are also looking to adopt more and more some of the technologies that are available and out there for more self-service. Anyone else on the panel have anything else to add to that, or conversation back and forth regard to kind of what they're seeing and how the landscape's changed?
Yeah, Brett. I mean,
Okay.
I couldn't agree with Sonia more. I think she said it really, really well. I mean, the customer has come to expect instant gratification, and they want it on their own time, real time. I think Sonia used the term like, things were offloaded to digital. That is completely true. I think she picked the year 2011 when she kind of started recounting history. I mean, I'll go back a little bit further. I'm a little bit older, perhaps, but I can say that this has been going back to the advent of ATM machines and 24/7 call centers, right? It's about trying to meet the customer where they are. So I couldn't agree with Sonia more.
I think 2011, 2012 was the pivotal moment for these things, right? Because everyone was walking around with mini computers. And I think that's where the overall tipping point was. But to your point, 100% agree. ATMs, self-checkouts, all of that dates a lot sooner than that.
That's great. Thanks for that, Jonas. Maybe let's jump to an opportunity to kind of open it up to all the panelists, and want to get folks' point of view on what is the thought around optimal combinations of digital channels versus physical channels. Let's also kind of chat about AI and how that's impacted things, and how they're leveraging that to build trust and a rapport with the customers, or the lack thereof. Maybe Jonas, if you can take a first run at that one for us, and then we'll kind of open it up to the rest of the group as well.
Sure thing. And I'll dovetail a little bit to what I think Sonia was describing, right? About meeting the customer where they are and trying to meet them in that real-time mode and so on. I think there's an inference here, right? That fundamentally banking hasn't changed, right? The nature of banking hasn't changed. It is still just money management and money movement and payments, saving and investing, right? It's about financing and borrowing. But I think what Sonia's alluding to is that trying to meet the customer where they are has absolutely been transformative. I mean, and the pace of evolution has actually been scary to a lot of us in this business. And when you think a little bit about, what is the best way to interact with the customer, and, Brett, you're asking about that optimal combination, digital, physical. Well, as each of these channels has kind of been incubated or evolved or been created, a lot of times we draw those dichotomies. Is it a physical channel, or is it a physical approach, or do you want a digital approach? Do you want to talk to a human being, or do you want to interact with a bot? Or do you want it to be something that you do online, or should it be offline? And I think if the fundamental, concept that Sonia is talking about is about just meeting the customer where they are, I would probably contend that a customer doesn't necessarily prefer one over the other, that they prefer a bot over a human or a human over a bot. Even though my wife would argue otherwise, she would say she doesn't want to talk to a person. She actually prefers talking to the machine. But if I break it down a little bit, here's my point, Brett. I would contend that what the customer really wants is they want what Sonia was talking about. They want things to be quick. They want that to be accurate. They want it to be seamless. They want it to be frictionless. They also want the confidence. They want to have trust. They want to be free from anxiety that they know that their money is in safe hands. And in a day, in years ago, you might contend that might require a human being doing that. These days, my wife might say, no, I'd rather trust the machine. I think if you break it really down and think about what the customers actually prefer, I actually don't think it matters if you are delivering that experience either via a computer or an artificial intelligence or with a human being. What the customer really wants is a sense of trust and rapport. What they want is things in their time, as Sonia was talking about, real time, instant gratification in the palm of their hands. And so what we believe, I work at KeyBank and I work in the fintech division called Laurel Road. We believe that the world is going to start blurring the dichotomies, right? Is it truly human versus a computer, or online versus offline? We actually think that the ideal customer experience might be one that leverages the best of both worlds. I can imagine a world where a customer might be interacting with an agent over a video call like this, while the artificial intelligence and machine learning is actually helping the agent be faster, more accurate, more precise, more personalized. while the customer is actually taking out their phone and sending you pictures and documents of the things that you need to have from them. Or maybe they're authenticating with bio. So it's really kind of the best of all worlds. Actually, my boss calls it phygital. I don't know if I like that portmanteau, but he calls it a phygital world in the future. And it's really just about, leveraging the best of human interactions and computer interactions to deliver what the customer really wants. And that is just quick, fast, accurate, seamless, and so on. In fact, I'm going to piggyback on something that Sonia said. There is a reality, she called it offloading to digital channels. Over the course of the last 30, 40 years, people in my line of work, I've been digitizing experiences for 30 years now. By its very definition, I am taking all of the easy interactions away from our human agents and putting them into the phone or putting them online. So if the customer actually has to call you, by its very definition, that is going to be a hard call. If it was already easy, they probably took care of it on their mobile app, right? Or they took care of it online. So if you're actually talking to a human representative, by its very definition, it's something that they couldn't do themselves. So we have to almost envision a world where the computer and the human being are working together to try and handle arguably the most difficult interactions that are coming through.
That makes sense, and that's great. Jonas, your wife and my wife should get together because I think she'd rather talk to a robot than a human as well. But what are your thoughts too? Maybe just to throw something else in there and then let the larger panel weigh in as well. But is there a possibility that, let's say one day I'd rather talk to a human, another day I may just want to do something on my own through self-service? I want to kind of get a view on that as well. Just because you may be a self-service person one day doesn't mean you may not want to, and depending on the topic, need to get a hold of somebody and talk to them face to face or over the phone. How does that play in as well?
Yeah, Brett, I know, of course, the other panelists, I don't want to suck up all the oxygen here, but I think my response to you would be that the world is constantly evolving. I can remember a time I implemented my first chat bot going back maybe about 18 years ago now, 16, 18 years ago. And at first, all of our customers hated it. It was not terribly sophisticated. It wasn't really that accurate. You type in a question like, hey, what's my balance? And the bot would respond back with, a payment address. So it took a little while for all of our bots to actually learn from those interactions. The models needed transaction data to be able to get better. But the world has evolved. And at this point, perhaps this is sacrilegious to say this, but our bots are arguably faster and more accurate than our human beings at this point. And the world has kind of shifted because of all that data churning through it. So my comment to you would be, again, I think that the customer just wants quickness, reliability, accuracy. If it means that, it's John or Jonas or Sonia delivering that message, or if it's actually the bot delivering that message, I think the customer just wants accurate information in real time.
Absolutely.
I think, sorry, just to add on that, I think if you can sum it up in one word, it's easy. Customer wanted easy to do business. So whatever that means, if it's a human connection or if it's a bot, whatever will get them what they want in the fastest, most accurate, and the easiest way is what the preference would be. And 100% agree. If it's going to have to if it comes down to talking to a person, it's an escalation. And it requires a whole new set of skills, which we can talk about later, from the actual humans that maybe we didn't need 15, 20 years ago. But now it's all about empathy. It's all about, act with urgency, with, consulting mindset as opposed to transactional one. So easy is the word of the day that I would argue would be.
There we go. We'll use that throughout the session. I like it. Anyone else on the panel have anything to add?
Yeah, I would like to add again, Jonas made a few good points in regards to how customers are expecting quick, easy, intuitive communications with their institutions. I also wanted to highlight the progress that we have made over the last 15, 20 years. I like Jonas' explanation of his first bot. It was not very smart, but it did the job and evolved and it grew into something more human-like type of interaction. When it comes to the knowing your customer, and especially looking into the younger generations, those that are all day long on digital world, I think we have to be cognizant that these technologies are representing the channels of communicating, engaging, and gathering information or exchanging information with the companies. So having the ability to have an environment that fosters multiple channels to pretty much enable every experience, every age, or every persona to communicate, engage, and get what they want in this interaction is critical. And while in the beginning, all these channels were kind of separate, you go on Twitter, you go on Facebook, you go on your own portal, you call, all of these channels were separate and independent from each other. And that was really causing, in many cases, situations that customers were not happy because obviously they were trying to get information on one channel. The channel was not intelligent enough to provide support, for example, Twitter, and then it switched to maybe an email, and then from an email didn't get the right response or the response on time. He or she called, and all this experience actually caused the customer to become frustrated. Now, with the use of AI, and especially with the use of, I would say, the large language models, the new concepts like, or newer, not new, but newer concepts like omni-channel, the ability to blend these journeys and to enable intelligent transition from one channel to another, enabling the customers to actually have an experience that enables them to quickly get to the point through any channel, not just to the one that actually they initialize the conversation. And more importantly, to prepare through the AI the people on each channel to proactively address, or sometimes the virtual person. It doesn't have to be, it could be a virtual digital person, or it could be a human, but to prepare this context into the multi-channel environment, or I should say omni-channel environment, in which by the time I switch from one channel to another, that human or virtual person will be prepared with my past conversation to know exactly what that story I have in mind or what my problems are, without myself having to reproduce my whole experience from the other channels. Those are just a few things that AI actually are enabling now in this in the banking environment, and the ability to provide quick, easy, and seamless transition from one channel to another, as well as to prepare the answers with the right compassion, the right answers, and even more, providing the right solutions, even though the solutions do not exist at the time of interaction. So those are just some of powerful technologies put at work for people. And I like Jonah's point. I believe that the more we use AI, we are actually going to become better in addressing and quicker in addressing these questions. But we'll always, at least in the next good years, I don't think AGI is going to get here in the next 5 to 10 years to take over from us. So I believe humans will still play a key role in addressing the most complex parts of this dialogue that we constantly have with our clients or customers.
No, absolutely. Thanks for that, John. Good. Let's maybe shift gears a little bit and talk pain points. Patricia, if I could turn to you, what are some of the biggest pain points customers have with banks and financial institutions that have an impact or degrade loyalty with customers?
Absolutely. I think one of the big ones is kind of what John has been speaking to. And I would say it's partnered with easy, but I think the end user's expectation for things to be easy has become a bit more sophisticated and demanding, and that they also expect it to be intelligent, right? They expect you to be connecting the dots between channels. They expect you to know when they need static content versus a chat bot versus an escalation to a warm touch. And I think the two biggest pain points I've seen are frustration with lack of intelligence, right? When for whatever reasons our technologies aren't connecting at the level that has been set elsewhere, right? Perhaps in less regulated industries, which is a problem we struggle with in banking. There are things we could do if we were allowed, but they're tough to pull off when we're working in the industry we're working in. I mean, the other one is speed, which is similarly difficult for us in banking to achieve. Like I think the two frustrations we see the most, and that we work the most with the lenders within our platform to find strategic ways to overcome, is how do we not ask the customer the same thing 12 times? Even if we're asking the 12th time because it's a fraud check. We know that they told us 3 times. We need to ask it again on a phone call. And if we can't avoid asking it, how do we present it in a way that says, I know you've presented this. I have it in front of me. Don't worry, I'm not stupid, right? But because of fraud, I need to ask you again. Like sometimes just giving transparency into our processes, how and why they work, and how we're on your side can relieve that frustration. If I know you're doing this because you want to make sure no one enters in my information and then takes out a loan on my behalf, well, gosh, I'm much more tolerant of the fact that I have to repeat my social last 4 to you again and repeat my address again to you. I get why it's happening. So some of it is really just, and of course, this is a marketer reinforcing that marketing is important. Some of it is context and human presentation of those reasons. And then the speed piece is also tough because a lot of the banking institutions I work for, listen, part of my secret sauce is that I do a really deep dive underwriting that involves some human touch that can't be automated, that can't be instant. And a lot of the conversations I have back and forth with those financial institutions is you have to move that further back in the process. There is no end user looking for a financial product or looking for a loan specifically that's saying, oh, I like that value prop. I like the fact that they're doing extra on the back end. Even if it's a soft offer and the hard offer comes later, they want instantaneous biofeedback on what is available to them in the marketplace. So to me, it's speed and intelligence, both of which there's an inherent tension in how a bank wants to operate, not just because they're archaic, but because they are so regulated and so focused on security, and a consumer's tolerance for what that means in terms of friction.
Oh, that's great. Thank you. Let's stay on that thread. I see we've got a question here from the audience, and then I'll open this up to all the panelists, as well as feel free to weigh in, what Patricia just covered. But the question that's come in says, how can banks balance between prioritization or personalization, data privacy concerns, and build a more trusting relationship with customers? Anyone want to take a first crack at that?
I can kick it off. So certainly with the help of large language models, specifically the use of ChatGPT, Bards, Llama, and so on, all these really powerful technologies, personalization and hyper-personalization is becoming easier and easier. Technically, we can leverage these technologies and the minimum amount of information, personal information, to come up with extremely powerful customized solutions and answers for the needs of our clients. But with the power of these technologies, it comes also a lot of risk, a lot of privacy concerns, fairness concerns, ethics concerns. So all of these have to be balanced and have to be properly discussed with all the stakeholders in any organization. When we are building AI solutions, especially driven by AI, we have to create a framework that is enabling a full transparency from the beginning to the end of what we try to create for that specific problem solving or a new idea they want to put in enhancing our customer focused or being more customer centric. So having the right framework in place that gives the transparency, it usually ends up with a great solution, because everybody from the beginning to the end is aware about what each of us in this journey from security, compliance, risk, MRM, all of them should be fully aware about what we intend to do. And then I imagine this always as a train station map. In each station, we have to know exactly what are we addressing, from engagement, from collection of the data, from data governance, from how we are actually exposing the data, how do we make sure the data exposed to the client is fair, and so on. And having this train station really is going to enable us at the end of the day to make sure that we are building something that is customizable, is focused and hyper-personalized for the needs of the client, which is exactly what the client wants. But at the same time, it ensures to mitigate, to reduce the risks in case that our large language model has any potential incorrect answers, anything that could put the reputation of our company or at risk. So that will be my again advice, and the way I look at both the benefits of using AI as well as balancing it with the risks that we might encounter.
Thank you for that. Anyone else? Okay. Maybe let's stay along the lines, John, of data and large language models and how that enhances the customer experience, and what business, how the business should integrate large language models and benefit some of that. Let's maybe spend some time there just to expand upon kind of where you were and where we want to go with that, and then let the larger audience panel weigh in on that as well.
Yeah, so large language models is not something new, but I remember I used the first large language models, BERT, 2017, and that 2016, 2017 with BERT, Google just released at that time their containerized solution. So it really helps to use these pre-trained models on large amounts of data, and then in a very short time customize them with your own data, and that means that not only that you're benefiting from these powerful conversational generative models, but you are able to customize it quickly. You don't need all the infrastructure and all the data that you might not even have. But with a small bag of words, with the small data that you have inside of your organization, you can really come up with some really powerful solutions for clients and customers. Now, the problem is that when the benefit of using these large language models is clear, but they, like I said earlier, they bring a lot of risks, and risk about privacy, risk about personal information, risk about intellectual property. All of these risks, unfortunately, are very difficult to overcome, especially in the large language model of today. In 2017, I could actually containerize a BERT and put it under my own firewall and put it in a virtual private network that only access from the cloud provider was to see how many hits per day my model had. Today, with the large language model, that's impossible. You cannot containerize it. So that's a challenge that I'm working with the cloud community to figure out how can we actually execute the same type of environment, of engaging environment, like checking on and providing quick answers in insights to the customer that are really delighting our customers without jeopardizing any private, any intellectual property. And that's not easy. And even more, I think in the space of banking, we want to empower our engineers to be more productive, more innovative. And that's also going to drive more customer-centric products, but at the same time, it's going to bring other risks, internal risks, like sharing code in this large language model environment for, I don't know, some engineers want to see if there's a better version of that code, if some wants to see if the code has any flaws or anything. Well, just sharing that specific piece of code might actually show intellectual property, how we actually process things and how we actually think about how to process things and so on. So those are just a few challenges in today's world. How can we make the best out of these technologies like large language models, but how to protect both the company as well as, of course, most important, our customers' privacy and fairness and ethics and so on.
Yeah, the piggyback on John's comment, I think John's last two responses are very, very astute, and pretty. I guess, John, you've been involved with this longer than any of us have, perhaps. I think there's another thing that is almost a catch-22, and we were already talking a little bit about how the fundamental power of the AI models are around having enough data flowing through those models so that the models get trained well enough, right? So, for example, I was talking about chatbots. It took years for the chatbots to actually get learned and sophisticated enough to actually have good interactions with customers. So one of the things that KeyBank and Laurel Road have actually been entertaining are a number of AI providers that are more like communal software as a service providers, where they have an AI that they're rendering across, say, 50 or 100 or 200 lenders. Now, at its core, it solves for something pretty tantamount to the AI models themselves, that they can have more data flowing through their neural net or their models than we would ever be able to have in isolation. It is fundamentally, by definition, going to be a better AI than something that I implement on my own or on-prem and so on. But it introduces an absolute sheer amount of complexity that John is alluding to. And that is, well, how do I solve for privacy? How do I solve for secret sauce? How do I share with my frenemies, I guess my friends and enemies, how do I share with my frenemies, but not let them see too much about what I'm trying to do, but try to take advantage of the machine learning and the AI that really is only as powerful as the data that's flowing through it. It's a challenging balance. And on the one hand, the business side of me says that I'm okay with sharing with my enemies if we all kind of are training the model. The other part of me from a business perspective says, well, am I actually aiding my enemies? It's not an easy balance to strike, but this is something that we're constantly struggling with.
If I could just
No,
add
that's
one thing, because I think for both John and Jonas, what you guys said kind of triggered me to think about third-party risk management. So unless you have your own in-house developers that are building this for you, you have no choice but to outsource it out to somebody else who is a subject matter expert in the idea. And this whole third-party risk management is something that, it's been talked about for a very long time. But I think in the recent years, this has been elevated to the point that everyone understands that information security, cybersecurity is the biggest threat to any organization. So I just wanted to put it out there that, besides all of the challenges that we are all discussing about customer experience, there's this luring cloud of another challenge that has the potential to take the whole organization down if not mitigated properly and continuously, especially if you are having high-risk partners, vendors, startups, whatever the case might be. They're very, very, very integrated with your internal processes as it pertains to AI.
Absolutely. No, that was great. Thank you, guys. Let's maybe stay with challenges. And Tracy, if I can ask you or come to you with this one to start with, what are some of the challenges of digital banking for customers and financial institutions, and how are technologies such as Fernego and others solving these challenges?
Yeah, sure. Thank you. I think we've touched on a lot of the challenges here today. So when we talk about from a customer's perspective, I think what we were just highlighting about the security of your information and the security of the platforms that they are moving towards from a digital perspective are probably first and foremost in a lot of customers' minds. And then, of course, the technical issues of connectivity, maybe the lack of human interaction for certain generations will also be something that is a challenge. Complexity of the digital banking world for some, that may also be a challenge. And I really would like to mention too about the digital divide. So not all customers will have access to digital devices or the internet. So it does create a divide between those who have access and those who do not. So when we talk about financial accessibility to all, in some ways, if somebody's very remote, it actually does give them more accessibility to banking or financial services, but also for those who do not have access to that, excuse me, it can cause a challenge there. And then very similar for the financial institutions, it's a lot of the same challenges. So financial institutions, what we're just talking about with the security of clients' information and that third-party risk and making sure that you have the risk and compliance framework to manage this great digital transformation that all banks are going through right now. And most banks are putting their customer experience first, and we know that they want that seamless personal digital experience, and then also to maintain your edge over your competition as a bank as well. And then, of course, my background has always been in compliance and banking, so I can't go without saying compliance is a big issue, whether that's data privacy, e-signature, AML, or KYC. And then, of course, just your operational efficiency, the challenges around legacy platforms and moving to more of this digital platform.
I'd like to add a little bit. I think Tracy made a good point about those individuals, customers that might not have the technologies they need to connect and interact in order to get with the institutions to get their information or request information. I also want to highlight that the banks have to be prepared for the younger generation as well, which unfortunately they don't communicate through the regular, for us, cell phones or laptops or other devices. They like maybe to be in the metaverse. They like to be in the virtual world, where the banks, unfortunately, in many cases, they are not there to make it easy for this individual younger generation to collaborate or to attract and retain this younger generation. So having mobility available on virtually any device, and no device, to Tracy's point, no device if somebody needs to engage by phone or physical location, that should be available. But also we have to think about the future generations, especially younger one, that they need to use Oculus, or they need to use interactions in ways that many banks are not yet prepared for. And again, in the metaverse, leveraging AI to collaborate, conversate with these individuals, same as we do right now on the laptop or on the phone with the chatbot, and collaborate with somebody, speech to text, text to speech. Now with the help of LLM, it took it to a level that we can integrate in the metaverse any virtual persona that can really make a huge impact on potential clients.
No, absolutely. Anyone else want to add to that? Okay. I think we've got a second question that's come in, and it's a little bit tied to where we just were, and this maybe allow us to expand a little bit more too here, is what are some of the best practices for banks to effectively use social media and digital marketing channels to engage with customers, build brand awareness, and improve their digital presence? Anyone want to tackle that one?
I guess I'll start, but I can imagine that everyone would probably be able to respond to this one. I'm actually going to draw a distinction between the social media and, say, digital marketing. In fact, actually, with digital marketing, I feel like digital marketing was actually one of the very first use cases for applied machine learning and AI with programmatic media. I can actually remember going back almost 18, 20 years ago. I remember one of the credit bureaus asking me, what do you guys know about programmatic media? I came out of that meeting saying, I said immediately I had no idea what it was, and I had to immediately go do some research and come to find out what that was. But from a digital marketing perspective, the machine learning and the AI, especially with DMPs and DSPs, has been around for quite some time now, and has gotten almost a little bit creepy in the sense that those marketing impressions that you may see, they're following you around. I suspect that every device in my house is listening to me. So my guess is I'm going to start getting banner ads immediately after this about something that John said, or maybe something that Sonia said. I think it's going to happen. But it is actually becoming a best practice. I mean, I think John touched a little bit about how that hyper-personalization can provide a powerful customized solution. I think that's John's words. And he's also talking about the youngest generation, not to stereotype too much, but if I were to generalize a little bit about Gen Z, I think that the concerns about privacy, again, generalizing a little bit, are greatly diminished from the 2-3 generations prior. They actually almost have a default expectation that things are going to be hyper personalized and so on. In fact, this is the quandary that financial services will oftentimes run into. The Gen Z customers that we have are judging us across verticals and industries. They get this great experience at Starbucks or at Amazon, and they expect the same thing from their grocery store and from their bank. And they don't realize that we have a whole regulatory kind of oversight and a governance requirement it's not easy to navigate. So from my vantage point, like, digital marketing has been around. It is the best practice because you can get to that hyper personalization that John's talking about. The other thing that I find really fascinating is that the youngest generations actually come to expect the interactions in digital marketing and in social media. 10 years ago, Brett, it would have blown my mind that people would have interacted with you over a social media channel for a customer service question. And it's not authenticated, it's not private, it's about your account. And literally, we get questions on Facebook and on Instagram saying, hey, can somebody call me back about my account? 10, 15 years ago, I would have probably said, I don't even know how to find your account. Who are you?
Yeah.
Now, there is an expectation that we service you over social media. That is mind-blowing to me. So the first question that came in from Ryan A. saying, yeah, what's the delicate balance between privacy and personalization? This latest generation, I literally had to host a group of 18 Gen Z kids at KeyBank on Monday of this week because I don't understand their way of thinking sometimes. They don't necessarily care as much that they're literally asking me to answer a sensitive question on a social media channel. So the best practice these days, my answer to Sean Collins is that the best practices are shifting. They're constantly evolving. The sands are constantly moving on us.
I will just add to that.
Absolutely.
Everything you said, 100%. Gen Zs, I think, are changing how we view privacy, how we view engagement. Social media, getting customer requests, concerns being aired out on social media, like that started, I don't know, probably a few years ago, and it's evolving. But I think it came a step higher with introduction of Google Home, Alexa Home, where you now have those devices that are, to your point, listening all the time, but are also now having the expectations of the customer to say, hey, Alexa, what's my balance? And for this thing to actually respond to you and integrate with your own account. And I know for banking, it's a little bit, iffy how well you can do that, but there are other industries that, absolutely they can do it and they're able to do so. Like let's say your utility bill. Hey, Alexa, what's my account balance on my so-and-so bill? And Alexa tells you, then you say, okay, can you please pay that? And if it's connected to your credit card, it will be able to do that, not necessarily through your bank account. But it really did change not only the privacy aspect, but also the expectations of what technology is capable of doing. And, me raising two Gen Zs, I can tell you that by the time they're at the point where, they're adults, I can only see how much more it will progress, 100%, because I can already see the big change just in the last 10 years alone.
Absolutely. Oh, this is great. Anyone else have anything else to add? Okay, let's maybe switch gears a little bit to contact centers. And I'd like to go to Sonia and Patricia on this, and maybe a multi-question for you guys with regards to, how is emerging technology changing the landscape of contact centers, as well as, will AI replace the need for human interaction in contact centers and some of the high touch and interactions maybe that are required from a contact center? I know we've touched on this a little bit maybe early on with regards to, what can we peel off and let AI and chatbots and automation take care of, and what needs to be left for more higher end, kind of high touch, and or just depending on what the customer wants at that point in time and how they want to be served. So I'll launch that out to you two and let you guys kind of get that topic started, and let the panel then kind of weigh in as well if they've got some points of views to add.
Sure. Patricia, you want me to start?
Yeah, go ahead.
Yeah. So I think I mentioned earlier, and I stand by this. I think there will always be a need for contact centers and the human connections, because, technologies can only do so much, but there is a point where, there's an escalation that requires human emotion, that requires empathy, that requires a lot more than what technology can provide. So I don't think contact centers are going away. However, what is going away is the skill set that we are utilizing for contact center. I mean, it's already different today than it was 50, 20 years ago. But I think it will progressively, I think, get more stringent, because we're now focusing on omni-channel communication skills. So it's not just a matter of, how you communicate verbally or, how you write. It's now, how you can do both at the same time, and possibly evolve that even more. I talked about empathy before, and I mentioned that now because I don't know that we will ever get to a point where bots have that ability to feel stuff. So I think empathy and problem solving is something that as a skill set that it would be required, and it will only get more important in the contact center, because only the types of calls that will get there will be the ones that require human connection. and acting with urgency in a consulting capacity, not a transactional capacity. I think that's probably the biggest shift that the contact centers have already experienced, which is that expectation that, hey, as an agent, I'm required to, do X, Y, and Z, where all of a sudden, hey, your bots are going to do that. What you have to do is have a conversation with a customer, ensure that you actually understand, be a bit of a, I don't want to say a shrink, but yeah, sometimes, tough conversations require a special ability to hear customers out, respond to their concerns in a way that actually makes them feel good about that conversation, in addition to resolving the problem. So, what's the right balance? I think AI, 100% transactional types of interactions will and should go that way. And for human, it's the escalations and retentions type of conversation that, in my mind, will stay with the contact centers. I don't know, Patricia, if you want
No,
to
I
add anything.
agree completely with you, Sanja. And I think that especially for, more mid-sized banks that used to see outsourcing to a contact center who kind of like handle those kind of communications at scale, I actually do think that you'll outsource to AI, and that piece of your comm stack will be an automated piece of the comm stack, because I think more and more will chip away at all those more transactional conversations, and the conversations that still require human touch and escalation will be so high touch that they will be insourced again. You know what I mean? So I do think there's a shift in how you architect that stack of resources. And I think the TEMI gets automated, and the closer you get to like really sticky problems that require a lot of empathy and problem solving, the closer you get to things that were always escalated back into your core team to begin with.
Absolutely.
Yeah, I believe that now, over the next maybe few years, we are going to see tremendous progress into the space of large language models. This is now a competition that all the large tech companies are involved in, and even more than technology companies. And that's going to be an immediate impact on the how we actually engage with our clients, and contact centers will certainly have the biggest benefit from this progress. As like a few years ago, I know in some of my post-banking experiences that the bank was able to actually collect information during the communication on any channel, Twitter, Facebook, email, summarize the information before the person wanted to talk with the representative, and even more, figure out the sentiment of that conversation and the level of sentiment on the number, like very angry or very happy, why it was very happy, very angry, and then provide some steps on how to greet and how to talk with the customer in the context of that specific sentiment and problem that the customer was calling about. Now, with the help of these large language models, the technology will be more than that. It's technology now able to go and search to see what caused the problem. It's able to quickly bring answers to the specific representative, guide a discussion, and even counsel the representative on how to handle different topics that the representative may not even know, not being trained or not being skilled or not being prepared to handle those. So those are just a few features of the LLMs. And again, as soon as we can trust them with the knowledge that we have in the house without being, lost into the large language model knowledge. So as soon as we can figure out how this knowledge that we have internally can be shared with the bots, this large language model will be enabled to provide all kind of guidance and all kind of support to the customer care representatives. And in many cases, there can be handling from an end-to-end conversation and keeping the humans only in those very critical and very, I would say, unable to solve. Some people will always want to talk with the person, and that's a fact, and then that's something that we will always have to keep in mind. But in the, I would say, next few years, I would expect large language models to be able to handle most of the challenging conversations in the space if we can figure out how to prevent risk to be added to all of our discussion. And I just came from MIT couple of weeks ago to the Innovation Summit, and I remember Sam Altman was there. He was telling that from 10 questions, 9 of them could be answered perfectly fine. But even if one question is not correct, then what are we going to do about it? Because that's the problem with these large language models. But if we look in the bigger picture, humans are the same. We are also not providing correct answers all the time. And in many cases, we make more mistakes than the machine. So again, that's something we always have to balance. And we also have to see how can we mitigate the risk without stopping the progress of technology.
Yeah, John, I'll add to that is that, the saying is technology allows us to work smarter and not harder. And we continue to move, we transition our customers' expectations are transitioning as well. So I do believe that certain technology can provide that risk framework for banks and institutions to banks can focus on their customer experience, and you can outsource that compliance and risk programs to give you the framework to be able to progress with the client's expectation.
That's great. I think what I'm hearing from the group is that we can leverage technology to help serve the customer, but then we can use that technology and the data and the modeling and the information to help the individual in the contact center, right? Understand, what's coming in, what's the sentiment of the individual, how do I respond and help this customer? And so that data and that technology is being used in multiple ways. That's great. Good. Let's maybe shift gears a little bit and talk about client onboarding. We haven't gotten touched on that topic too much yet. And Tracy, maybe I'll ask you is, what should people be keeping in mind when looking at digitizing the client onboarding, process and journey?
Yeah, absolutely. I think that's a great area that you definitely should be outsourcing to a technology platform to work smarter and not harder. There are many regulatory requirements I think everybody on this call is aware of. When you onboard clients at financial institutions, whether it's a KYC, AML, which Patricia talked about earlier, collecting the data, the general data protection regulations. These are a lot of concerns with both the clients and the banks, and how do you automate that so it's a cleaner, it's a risk mitigated kind of framework, whether it's the Consumer Financial Protection Bureau or e-signature. All of these sort of concerns from an onboarding perspective, third-party risk management platforms can help you kind of provide that seamless onboarding process. So again, then you can focus on your customers' needs rather than what the regulatory needs are.
Absolutely. Anyone have anything to add to that? Okay. A couple more questions as we start to kind of come to the conclusion here and kind of wrap things up. Let's talk a little bit about fraud and fraud prevention, fraud loss, and those types of things, and maybe even spend some time on payments and money movement. So Jonas, maybe I'll go to you quickly on kind of how banks are leveraging technology to make sure that there's still a great customer experience, but at the same time they're protected from from credit and fraud losses and those types of things.
Yeah, it's kind of an underpinning or an undertone of like the entire conversation for today, right? So even though you heard from John and Sonia saying like we were and Patricia like we may never get away from human interactions, we also have to probably admit to ourselves that the world will proportionately move much more digital, much more AI, much more machine learning, right? And so it will not look like it did in 1980, 1990, 2000. It's going to be much more a digital world. And something that, for example, like we deal with at Laurel Road and Key Bank, Laurel Road is a national digital bank. By definition, we may never interact with a human being, right? Like we may never interact with the customer. And all of our interactions may very well be electronic. So it poses a whole number of other risks and other concerns, especially around credit and around fraud ID verification, ongoing authentication, phishing, spoofing, spamming, also account takeover, hijacking, first-party and third-party fraud, and so on. It's an ongoing battle. But I'll draw an anecdotal example. Way back in my old life, I used to work in credit cards, and I can remember a time with authorizations, right? Your credit card swipe at the point of sale. The only real tool that we had in the credit card industry was a fairly blunt weapon. You could either, if you didn't think that, say, Tracy was who she was, or she had lost her credit card, you could do one of two things. You could just outright decline it, right? And just decline the purchase, decline it at point of sale. Or you could do this goofy thing where we made the merchant try to call in with Tracy on the phone. And exactly nobody did that, right? Like nobody really wanted to do that. So we were relegated to just one possibility, and that was just to decline the charge. But you guys can, some of you probably remember these days. Number one, if you did it often enough, it's kind of an embarrassing user experience, a customer experience. You're getting declined at the point of sale. And you can't tell if it's actually a fraud situation or because somebody else is looking over your shoulder and saying, ooh, that Brett must not have very good credit. It's an embarrassing experience. And so it really boils down to, like, how do you try and prevent the bads while not completely alienating the goods? And this is the crux of, I think, of your question, Brett. Like, how do you leverage technology? How do you leverage AI and what John was calling around hyper-personalization and so on to try and rifle in and prevent those losses, prevent those bads, while also letting all the goods have a good experience? So with the credit card world, it has evolved. The best practice now is that with SMS and having an authenticated device in that customer's hands, I could real-time text Tracy and say, is this you? And maybe with a bio authentication or a one-time passcode or OTP, I can confirm that is truly her making the purchase. And if not, I'll tell Tracy, hey, we've got a suspicious situation, why don't you give me a call? And it's about leveraging technology, constantly evolving so that you're not totally creating a terrible experience for everybody. You're trying to compartmentalize, catch the bads, prevent losses, and so on, while providing a great experience so that you can let the goods through.
No,
Yeah, I
absolutely.
want to add that the future of any business will rely extensively on two things: AI and security. And unfortunately, until now, I think, John, as you mentioned, phishing. Phishing was something very easy to detect by most organizations. Now, with the use of large language models, this is going to become extremely difficult, as you're not going to see misspellings or issues like that in any phishing email, because now these threat players will use AI to write the emails and shape and format those emails in a way that actually is going to be almost impossible to detect with the human eye. It will have to be uncovered again with the help of AI.
Anyone else? Nitin, how are we doing on time?
Yeah, I think we are on time now.
Okay.
Time is
Can we
up.
take any more questions, or do we got to wrap it up?
We have questions.
Looks like one more question came into the chat, and it kind
We
of
can
ties
just
into
take
the
it
last
over
question
and then
we
we can.
had.
Yeah.
What's that?
We can just
We
take
can
it
take
over.
one more.
Yeah.
So as we wrap up, and this kind of ties into the last question we had, and actually kind of touched on it right before we jumped into the credit and fraud, but it has to do with payments and money movement and the future of digital banking when it comes to those items. And then it looks like we had a question come in, so we'll just tie those two together and kind of use that to wrap today's session up. We got a question that came in that said, do you think the customer experience on transfers and peer-to-peer payments will change with FedNow solution? So I'll open that up to the entire panelists, and we'll kind of use that and payments and money movement to wrap up today's discussion. Anyone have thoughts, ideas, want to respond to that?
I'll give some thoughts on that. So before I moved client side in the fintech space, one of the last large consultant initiatives I did was helping Early Warning to build Zelle, which was directly in response to kind of, the Venmos of the world taking over this peer-to-peer payment solution, but giving them really access to the daily transactions, which then became a kind of existential threat to engagement and brand awareness for banks. So I'll say, like, one of the biggest challenges in getting Zelle to where it is now, which is a player there, was one, brand awareness, two, peer adoption, because the way Venmo kind of like got its primacy over Cash App or the others is your friends were using it and you want to send money to your friends. So like Square would have to work really hard to get enough of your friends on it to have you trickle over there, right? Most of us are fast followers and just use what the early adopters use. And Zelle had an incredible advantage in that because of the number of banks that were part of early warning that committed to putting Zelle into their platforms at the same time, they could leapfrog this incredible challenge most brands have in getting into this space where suddenly all of your friends had it, right? Overnight, all of your friends had it because it was present in these banks. So that's the biggest thing that I look at. And it's not that FedNow can't overcome it, but I look at it and wonder what strategy they're going to take to overcoming it, because it's going to take more than just a few banks that have been struggling suddenly saying, oh, there's an easier implementation path for me. It's going to take a mass number of banks adopting it in a uniform way, and in a uniform way saying to consumers, this is now a viable solution to get that groundswell of users moving towards it. So I'm keen to see it, but I don't think it will happen without some very deliberate kind of like brand and implementation strategy that creates a network, not just a number of implementations.
So maybe a Canadian perspective, because I recently found out that that's a thing in the US.
Oh yeah,
because I'll tell you, for years.
For 30 years. It's weird that we even have to think about it.
Yeah, I mean, for years, you can send money peer-to-peer via email. That is peer-to-peer.
And Brett, then I'll just wrap it up in saying what we'll see is the rise of transaction monitoring. We'll use technology to get that security and that enablement behind those cash transactions that are done through technology.
Absolutely.
Yeah.
Great.
Thank you. Thank you, guys. I think it was a lovely panel discussion. I know the discussion never stops, but thanks a lot for giving your time in such a 1 hour panel discussion where we all discussed at length. So I'll wrap it up. We extend our gratitude to our community partners, the esteemed speakers, and the attendees who participated in this forum, which provided a platform for knowledge enrichment. I'm sure we get a lot of knowledge through today. Our panel members were exceptional, and we appreciate their willingness to come together and share their valuable insights. Further, if you feel you missed something or wish to look back at the session, let me inform you that today's event was broadcasted on the YouTube page of our company, so you all can go the recording and see the recording anytime. And if you are looking out for recent technological updates and advancements, log on to our website and social media channels. We'll be sharing lots of knowledge sharing topics, details, announcement of the next events, and much more, which will help you register and attend the same. Before we pull the curtains on, we would like to thank InfoVision, which is our knowledge and innovation partner, and Digit7 is our technology partner. To understand more in depth and connect with them, all of you can go through their website, which is infovision.com, and stay abreast with the technological advancements. There are lots more in store for this year, with a focus on a lot of industries like banking, financial, insurance, telecom, retail, supply chain, manufacturing, energy, healthcare, utility, and so on. So I request all of you to keep connected with us and enjoy the learning. It was a pleasure bringing this session to you, and we hope that you enjoyed it as much as we did. We look forward to having more sessions with you. Take care and have a lovely day ahead. Thank you, guys. Bye.
Thanks, everyone. Appreciate it. Thank you to the panelists.